Hello, and thank you for joining me to go through our Doctor's Wealth exclusive presentation, The 5 Secrets of Making the Most of Your Income as an Intern. My name is David Hooper, and I'm from Doctor's Wealth. Before I get into the presentation, I'd like to mention who we are, what we do, and where we're based. Doctor's Wealth is a financial services team of 3 parts established to offer the members of the medical profession with a complete financial solutions service. Simply put, a one-stop financial services shop for doctors. The 3 parts to the business are Doctor's Wealth Planning, Doctor's Wealth Accounting, and Doctor's Wealth Property. So whether we're setting up the basics for you before you even start working next year, to helping find your first home and guiding you through the purchase, doing your tax returns, or later setting up business and investment structures when you become a consultant, the idea is we're able to look after all of your financial needs in every area from start to finish. As a small and specialized company specific to doctors and their partners, we pride ourselves on offering one-on-one personalized service. Now I put in this slide just so that you know exactly where our office is. In case it's not clear, our main office is on Butterfield Street, right next to the Royal Brisbane Hospital. The reason for being there is we know what our clients do, we know how busy your life will be over the next few years, and we want to make it as easy as possible to meet with us and get things sorted out. Okay, let's get on to the meat of the presentation, the 5 secrets of making the most of your income as an intern. I'm taking a few liberties with the word secret here, and as most of you will see as we go through, a lot of this stuff is just common sense. But, in the words of Voltaire, common sense is actually not that common at all. Okay, secret 1, mastering your cash flow. Why is it that some people do much better financially than others, even when they're the same age and both earn the same income? The answer lies in the following statement. Financially successful people spend less than they earn and use the difference effectively. If you take only one thing away from this presentation, please take that statement. For if you get that one wrong, all of the other things won't matter. People will often know how much they earn, and often to the dollar. They know this because they see it show up every fortnight in their accounts. Unfortunately, those same people will often have no clear idea what happens to the money after it gets to their account. We believe mastering your cash flow is the first and most important step to creating a sound financial future, and we use all of the tools available to help ensure that our clients benefit in this area. Okay, secret 2, protect your biggest asset. Firstly, what is your biggest financial asset? You've just spent a minimum of 7 years at university, plus countless other years of formative training, plus goodness knows how many dollars to get to the point where you are now, at the beginning of a new and exciting career. Over the next 20 to 40 years, your total earnings will be measured in the millions of dollars. You'll then use this money to go on holidays, have fun, buy cars and houses, support your family, create wealth, and generally build a happy and successful life. So, what then is your biggest financial asset? It's your ability to earn this income and create that future. Before I was a financial planner, I was a pharmacist, so I'm going to use a medical analogy for this one. If your finances were a human body, your ability to earn would be your heart. Your fortnightly paychecks are therefore the sinus rhythm of your heartbeat, and your income the blood that flows through your circulatory system to feed your financial tissues and organs. That's why the heart of your finances, your ability to earn, is your biggest financial asset, much more than your house, a car, or any investment. So, what then happens if you get sick or hurt and can no longer work? Well, to put it politely, you're in a spot of trouble. This is where income protection insurance enters the picture. It can provide you with up to 3/4 of your full wage if you are sick or hurt and unable to work. Like most insurances, it exists as a big safety net that you get, then pray you'll never have to use. Premiums for income protection will depend on a few things, including your age, your gender, and your occupation. The good thing is the younger you are, the cheaper it is, plus you have the option to lock it in at your current age. And as well as this, the premiums are tax deductible, so you also get to make a tax saving. Okay, secret 3. Give Julia a smaller slice. Reduce your tax. As an intern, there are some very effective measures available to you to reduce your tax and boost your fortnightly take-home pay. The biggest one is your ability to salary package. Put simply, salary packaging is a really complicated way of giving you some free money in the form of a tax saving. The way this works is it allows you to pay for expenses with before tax dollars that you would usually have to pay for with after tax dollars, things like your rent, mortgage, loan repayments, travel expenses, or even your HECS repayments. By paying for these expenses with pre-tax or gross income, you're not taxed on that income, thus creating the tax saving. The salary packaging year is from the 1st of April to the 31st of March, so it actually finishes about 10 weeks after you start work next year. What that also means is you've potentially got a full year's allowance available to you between when you start work in January up until the end of March 2012. It also means that you don't have much time to waste. The potential tax saving available to you up until March the 31st, 2012 is just over $2,000. So that's $2,000 of free money. Or, putting it another way, if you get set up correctly from the start, you will be up to $2,000 better off than another intern who drags his or her feet getting things right. Then, from April the 1st onwards, the yearly tax saving is a minimum of $2,865. That's not a one-off, but at least $2,800 every year in tax saving. Other expenses that reduce your tax liability are professional expenses such as course fees, conferences and memberships, plus, as previously mentioned, your income protection premiums. The fourth secret, making your super work for you. Now, superannuation, it's not that fun a topic. For most people, it's not an everyday topic, and it's certainly not a sexy topic. So, why should you be interested in super? Well, simply put, by setting this up right, you get free money. Free money from your employer and free money from the federal government. I won't give you a maths lesson here, but on a dollar for dollar basis, getting this right now is also worth more than at any other time in the future, due to the magic of compounding returns. The first relevant thing is how much you choose to contribute, as you're forced to make a contribution by your employer. We recommend the 5% option, as choosing this alone will get you $1,900 of free money from your employer in the first year. The next area is how you make that contribution, whether from pre-tax dollars or from post-tax dollars. Getting this one right at the right stage will make another tax saving for you, which on its own is worth at least another $1,000 in your first year. So we're already up to $2,900 of benefit just from super. The last area is where the money is invested. I won't go into the various funds, but I will say be wary of accepting the default option. It will likely not be the best option for your long-term wealth creation. So that's superannuation in a nutshell. Hopefully I've shown you that getting this right is a key part of setting up your finances correctly. Okay, on to the fifth secret, avoiding the rookie mistakes. I'll touch on two of these now. The first and biggest mistake we see on a day-to-day basis with young doctors is falling into the debt trap. Looking at the example above, an intern doctor borrows to buy a new car for $30,000. However, considering the interest and the fact that the money has to come from post-tax earnings, he or she actually has to earn about $56,000 to pay for the car. At $30 an hour, that works out to be about 1,800 hours of work, or 49 weeks. Now, don't get me wrong, everyone needs transport, but if you asked me, I certainly wouldn't work for a year of my life for no other compensation than a car that will be lucky to be worth $10,000 when it's finally paid off. When you reframe it in these terms, it doesn't look like such a great deal anymore, does it? I saw this slide the other day and thought I'd throw it in as well, especially since we were talking about cars. However, I'm not going to add any more commentary around this for fear of offending 50% of the audience. The final rookie mistake I'd like to mention is in regard to getting financial advice. What is the most expensive advice you will ever get? The answer is free advice, but from an ill-informed source. I won't harp on about this one too much, but what I would suggest you do is find someone you can trust, someone you can get along with, who understands who you are, what you do, what you want, and what is available to you, and whose interests are aligned to yours. Okay, so what are the offers to new interns from Doctors Wealth? Now, we are mindful that most of you will have just completed a long period of uni with more of a noodles and spam income than a ribeye steak income. As such, we wanted to make sure that our offers are as inexpensive to you as possible while still ensuring we cover the important areas. For us, your intern year is about two things. The first is meeting and getting to know you, and the second is having you see that we know what we're doing, plus we're trustworthy. Our goal for this year is starting to build a trusted advice relationship with you. Right, our first offer is not actually an offer at all, but a graduation gift from Doctors Wealth to you. What it covers are all of the things we just discussed, so sorting out your cash flow, setting up your salary packaging, setting up your Q Super, and setting up your income protection for zero. The way that we can do this is when we put in place the income protection part of the recommendation, we can use the commission paid to cover all of our costs. This means we don't have to pass any of our costs on to you, and also means that effectively the insurer is paying for your first year's entire advice and setup. We have put a limit on the number of people who can take up this offer, and we've limited that at 100, simply on a first-in, best-dressed basis. The reason for this is if there are too many people, we won't be able to provide the level of service that we want to, which is both bad for us and bad for you. The other offer, which is simply setting up your salary packaging and off you go, is $250 plus GST. For both of these offers, you can add your tax return for $200 plus GST. That means for the Doctors Wealth graduation gift clients, offer 1, you can get the whole kit and caboodle, including your tax return, for a maximum cost of $200 plus GST for the first year. In addition, all of Doctors Wealth property services are complimentary to all Doctors Wealth clients. This includes finding and setting up the best loan for you when it's time to purchase a property, plus the services of our property buyer's agent to help you find the right property, help negotiate on the price, plus guide you through the process of buying your property. Please see our website, doctorswealth.com.au, if you would like more information on any of these offers. I would say be sure to register your details via the website to make sure that you can access that graduation gift offer. As I said, numbers are limited at 100. Our process is that we'll then contact you to arrange to meet up and get things set up before you commence work. We recommend getting everything ready to go with heaps of time to spare, so as to minimize as much as possible the stress for you before you start work. I've put this last slide in, and it's just a few thoughts from last year's graduates. Okay, thank you very much for listening. Congratulations on completing your MBBS, and I hope that we speak to you again soon.